Yo guys, DevPrez here with another video. Today I want to go over the best stocks to buy in a recession. We'll go over sector performance during the last few recessions, and then from there I'll tell you guys the positions I'm going to be taking into 2023. We can see in this chart the best sectors in a recession are first consumer staples, followed by utilities, and then healthcare. The three worst sectors in a market recession are real estate first, tech, and industrials. We can see in this chart that we're in between the early recession and market bottom period of the cycles, and during those time periods you can see healthcare, utilities, finance in the early recession period, and then you can see at the market bottom period finance, technology, and cyclicals. People start to come into the technology at the market bottom because they're trying to jump the gun for that bull market. They want to be the first ones in and get that huge return, like people saw on Amazon when it was really down during the crash and then it came back up. So people are going to be trying to time the market bottom. I would not advise that. I would stick to some of these more healthcare, utilities, finance stocks for now until we get a confirmed bottom, until we go into tech. Here we can see the S&P 500 returns around recessions. You can see peak to trough declines. The average is minus 29%, median minus 24%. If you look at the year-to-date chart for S&P 500 now, we're at minus 21.29%, so we're getting pretty close to that average median of a recession. And then if you look 1 year later from trough and 2 years later from trough, the average returns on both those are 40% respectively, and then the next year, 2 years later, is about 55%. So that's why a lot of people are probably going to be trying to invest now, jump the gun, invest while everything's low. First, let's go into the utility sector with the first stock we're going to be looking at, stock ticker NEE, Nextera Energy. Nextera Energy is an American energy company generating capacity and revenues of over $18 billion in 2020. It is the largest electric utility holding company by market capitalization. Honorable mention for another safe stock in the sector, American Electric Power, stock ticker AEP. Very strong dividend on this one. The dividend on AEP is better than Nextera Energy, though I do see Nextera Energy being more driven by growth, as in AEP is more driven by the dividend and stability. Next sector we're going to look into is healthcare. We're going to look at Gilead Sciences. With the recent earnings beat, Alias Science is looking like a great buy. They're on the research and development side of the pharmaceuticals, which is a great side to be on, and I could see them easily doubling or tripling their market cap in the next 5 years. And an honorable mention for the infamous Teledoc Health, minus 70% on the year. It's a virtual healthcare company, heavily shorted. Kathy Woods has been buying, so a lot of people don't like her. A lot of people don't like the virtual healthcare system. They think it's stupid, so heavily shorted. I think it is starting to look attractive at these prices and with the recent earnings beat. Next up is the tech sector with Google. I like Google here, down 40% on the year. You can't time a bottom, and if you saw in the economic cycle, the market bottom period to the early cycle of a bull run is when tech performs the best. And knowing that you can't time a bottom, you're going to have to bite the bullet and start to invest a little bit into tech and lose money to make money. That's how you make money in a recession. You're not going to instantly see green. Your money's not going to instantly double in a week. But by slowly investing $100, $1,000, however much you can invest a week, you'll lose it. But in the long run, 2-3 months, it will come back and it will start to really snowball. And that's how people make money in a recession. The last and most important position of the whole video is cash. Do you guys have a big enough cash position? Do you guys have cash on the sideline ready to buy the dip? Because if you don't, then you need to be working those overtime shifts, picking up that extra job, whatever you need to do, cut back on expenditures. You don't need to be buying no watch, going to the club, popping bottles. Build up your cash position, save it up, and buy these low stocks on the dip, and you'll make money. It's easy as that. Thanks for watching. An update to the dividend account series is coming soon. hit that subscribe button, like the video if you liked it, comment whatever you guys want to see next. Thank you.